You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to go deep into the world of futures options. It's time for TWIFO. This Week in Futures Options. My name is Mark Longo, coming at you live every Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern. If you can't join us live, join us after the fact on your podcast provider of choice. We don't judge. As long as you listen, like, subscribe, send in questions, all the fun stuff that you guys do, vote in our polls. We do appreciate all the love that you guys send our way. And joining me on the old program today, we got a great cohort group here to help me dive deep into equities. First off, I'm pleased to say, returning back from his many travels abroad here, back in the studio immediately to my left in order of proximity, we got Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back from hither and yon, sir.
Thanks, Mark. It's always good to be here. Thanks for having me again today.
And the delicious steak buffet we had right before the show, that was just delicious. You know, it won't weigh me down for the show at all.
You got a little something on your mustache.
I got to wipe
there.
off the peppercorn sauce. Yeah, that was delicious. Making our co-hosts very jealous as we speak here. Speaking of co-hosts, let's see who else is joining us. Let's go in order of proximity. I don't know where this next guy is. Let's just bring him on. We got joined by our old friend holding down the CME Group hot seat, Mr. Tom Boggs, the director over there at Equity Products at CME Group. Mr. Boggs, welcome back to TWIFO, sir.
Thank you. It's my honor to join this group to talk about everything going on at the CME and with both Russell products and Quick Strike, as well as our equity products portfolio. It's a busy year.
Next time you have to make it in the studio for a little bit of steak. It's a fun time here. And now the studio smells very delicious, which is also good. And I can hear his jealousy rippling through the waves here. We're also joined by my cohort, my partner in crime, the creator of the newly minted super dark mode. You can only sell puts in it, listeners. All you could do for Quick Strike, Mr. Nick Howard. Nick, welcome back to the show. How goes the dark mode, sir?
Oh, it's looking pretty good, and I'm not jealous. I had my packet of Justin's honey almond butter just a little while ago, and my coffee. So
well, there you go.
I'm in good shape, and I don't believe that you had steaks. You're lying.
To each their own. You don't see the T-bone remains lying here in front of me. You don't know what we did here. Don't you accuse us of things, sir. But if I want to buy a call in dark mode, is that just blocked out? Can I not even see the call chain?
Yes, you can, but there's a secret keystroke sequence that you have to do.
Oh, there we go. I like it. It's like up, down, down. Then you could sell a call. I like it. Good stuff. We'll get to all that stuff. But we got Tom here. We got Sean here in studio. So we're going to talk some equities today, listeners. Let's get to it. Let's kick things off. Tom, you know the drill. Let's kick things off. You got a lot of different products in your purview over there in equity land. Let's start maybe drilling down, look at 10,000 foot a little bit first. What's going on since the last time we had you on? Catch us up on what's lighting up the tape, what's lighting up your day over there in the equities complex at CME, sir.
Sure. I'll sort of give us a past, present, future quick synopsis. So 2018 was an awesome year in the equity space at CME, including options. We traded for the first time ever over 200 million index options at CME, averaging about little under 1 million contracts a day. So if you look back 8 years, that would have been an astronomical ask, but we had a really great year. This year, as with all equity markets, we're starting off slowly. We're down about approximately 30% from that number, but holding our own relative to other equity derivatives. Part of our success over the last couple of years has been, we've talked about this in the past, a focus on short-term options. We now have Monday, Wednesday, and Friday options, and the short-term options comprise about the Mondays and Wednesdays, about 15 to 18% of our volume. So in the low vol market, these options are very cheap. And their premiums are cheap relative to higher volume markets. And investors are looking at them as a great equity play for the short term. We started out in this industry with 12 expiries a year, third Fridays each month. And this year at CME, we're going to have about 160 expirations. So keep that in mind. It gives investors quite a bit of flexibility as to their investment operations. We have about 19 of those concurrently being traded.
That's a kind of I didn't mean to cut you off, Tom. That's a terrifying statistic when you put it out there like that. Expiration used to be this thing, right? This great looming specter of expiration happened once a month, 12 times a year. It was a big deal, right? And everyone kind of planned for it. People would only trade expiration. It was a big deal. Now, what'd you say, 160? I mean, it's kind of mind-numbing when you hear those kinds of numbers.
It's 3 a week plus a few extras at month end. And through such tools like Quick Strike, investors can test and manage their investment strategies prior to execution right on our website. Thank you, Nick. And it gives investors a lot of flexibility. In our option space, we like to say that we have actionable liquidity. It's not just liquidity, but you can actually research, test, and execute your trade with quite a range of flexibility. We also have sort of a retro story, if you will. We still have floor options, our standard S&P 500 options, which trade in open outcry. It's a very rarely heard phrase these days, but we are enhancing our rules to try to bring on new users who haven't embraced listed products before, say, for example, from the OTC space. So we have two new rule changes, blocks and locks. Sounds like we asked Mark to brand these, but the block trade, we enhanced it by adding futures to it, the option block trade, which makes it obviously much more of a manageable trade. You can tie an option spread to a covered future. And we did the same thing with our large order cross trade, which trades in the pit. So our sales force is covering the globe, talking to buy side, sell side, interdealer brokers, liquidity providers about these new rule changes, which is stimulating interest in our old school retro product, if you will.
I don't know, Tom. If I did the branding, I might have come up with something sexier than blocks and law. I think I could do a good job. I don't know. Maybe you're denigrating my branding skills here, sir. But that's not too bad. I can roll with that. It's okay.
From what I'm hearing, it would need a food item. So
it might have a steak theme. I'm just putting that out there. Yeah. That goes along with the cattle and the hog, the products there. So it's not completely out of keeping from left field from what CME has. But you mentioned your team's traveling hither and yon. It's a great segue here. Let's kick things off with the man sitting here to my left. Let's talk a little Russell. Sean, when you guys first came on here, it was building new liquidity, right? So it was starting up. We were seeing decent trades, but they were mostly 100 lots here, there 100 lots there. Now we're starting to see the 1,000 lots go up, and for decent numbers of them. We talked about them before in the last show, 1,000 lots here, 1,000 lots there. Talked a few shows back, some big prints going up, I think in some near-term out-of-the-money puts. This week we're seeing, looks like a size 1x2 put spread out in September, going up about 3,000 by about 1,800 times. So pretty decent size. So while I have to say I hate to have you not in the studio all the time because we don't get the delicious steak when you're not here, but it seems like your road shows are starting to pay off, sir.
Oh, thanks. And I've said this before, and it comes from an old portfolio manager that covered me when I traded options. But the phrase that I use, and Nick's used it a couple of times: you buy puts when you can, not when you have to. And as I think we were talking earlier, the volatility has come in, so there's definitely those trading opportunities, and people are looking at RUT as one of those vehicles. Those small caps have just maintained focus.
Yeah, it's interesting because you're right. It has been a lot of a large cap macro story of late. Trade war this, macro that, European or risk and rates stories, things that you don't think are traditionally the domain of the small caps, and yet we've seen small caps moving quite a bit. Has that maybe made your job a little bit easier of late, seeing small caps actually not just participating, but leading the charge many days in these crazy moves we're seeing?
Yes, that has absolutely helped folks focus on the product.
Hopefully you can hear Sean on the live chat now. Really quickly, he just pretty much said that the small caps are pretty much moving and actually exceeding the large caps these days, even though a lot of the current trends are macro in focus here. Speaking of those current trends, look at it really quickly here. Our old friend, the VIX, off not a ton, off about a third since our last show. Right? It was about 1360 last show, about 1330 this week. RBX down a little bit more. So again, the vol moving in the small caps a little bit more, down about half a handle to about 1680. It was around 1730 or so last year. So that spread come in a little bit. It's not quite as wide as it was a couple of weeks ago. It was over 4. Now it's down to about 3.2. But still interesting stuff. And certainly it's not tight enough where it's killing volume out there, Sean, because it seems like we do see a lot of correlation between that spread widens out, seeing paper arbing between the two. Even though it's coming in a little bit, we're still seeing the paper flow, which I think is probably, I'm sure from your perspective, a good thing.
Absolutely. Definitely a good thing. Remind me, but the market rallied the last few days, and you usually see that those vols come in, and usually our RVX leads the charge, but it seems that the volatility is kind of maintaining at this point.
That is the case. Yeah, not a lot lighting it up from a vol perspective over the past week. And of course, if you want to hear more about that, listeners, tune in tomorrow for volatility views. But yeah, Russell coming into Showtime about 1584.5 off. Kind of unched almost on the week, off slightly on the week. And the big put spread we saw going up was out there in September. It was the 1,300, 1,400, 1x2, roughly 1,1900 by about 2,900. Not quite 1x2, but pretty close. Went up on Monday earlier this week for pretty decent size. So about 3,000 by about 2,000 over there. So pretty decent prints going up out there. Tom, I know it's been an interesting thing for you to watch as well. Kind of Russell come online over the course of the past year. Is this are you at where you thought you would be with it? Is it maybe exceeding your expectations to see some of these larger prints going up out there now a year or so later?
Yeah, I think we have a healthy start for this product. But I was going to ask Sean, since we have a new product coming online, to announce the Russell Micros.
Yes, very exciting. The Russell Micros. We're very excited to see the product launch, and we are working very closely with our CME partners on this.
Yeah, that helps. I'm sorry. Go ahead, Tom.
Yeah, we have a countdown online for our micro offering. Let's see, 24
May 6th,
days,
right?
3
May
hours,
6th.
11 minutes, and 33 seconds. So we have micros starting at 1/10 of the size of each of our eMini products, including the Russell.
Yeah, we're very excited about that. We talked about that week before last, but thank you for bringing that back up again. Now, Tom, back to you. Russell 2000 options, literally starting from zero. You've got over 30,000 contracts of open interest, and congratulations. I think that, as you said, it's a great start, and I couldn't agree more. So your volumes are averaging a couple of thousand a day, but some days they're 4,000 and 5,000. So it is a tremendous start, and we're very excited to see that growth.
Great. We have maybe 25 to 35 liquidity providers in our S&P options, and that can go higher from that level depending upon where volatility is. And most of those are trading or looking at the Russell options. So it's we have the actionable liquidity that we talked about. Our pricing on screen seems very competitive. As we talked about, we're in a little bit of a volatility plateau here. I think maybe we started the year with some volatility fatigue that hopefully people can work through. And as volatility comes back, and I am predicting it will, I don't have a date on that. I don't have a countdown calculator on it, but it'll come back, and I think we could see that up, 10 to 20% if volatility pops again.
Yeah, speaking of popping, let's see what's popping in some of the other complexes out here. Obviously, a lot going on in the equity land. S&P eMini always lighting it up out here. The eMini, like we said, all the equity indices kind of off slightly on the week, but not a huge move here. We're at about 28.87 coming into Showtime out here. Let's see what's lighting it up out here. We talked about kind of longer term, out of the money put spreads, 1x2s. Let's see if we see something similar in the eMini here. Looks like the big trade leading the dance. It looks like a fairly quiet week for the eMini. It's actually near-term upside calls in the weeklies. Again, the weeklies are kind of where the action is for all things equities these days. I don't care what complex it is. If you're not looking in the weeklies, you're kind of missing the lion's share of the story these days. And it's the 2,900s going up a little bit north of 12,000 times pretty evenly throughout the week, about 3,000 and change every day except for Monday. So probably a little bit of overwriting going on up there, as well as maybe some upside call buying. You never know. Out here in the eMini, let's see, that was net opening about 1,100 or so. So a lot of back and forth on that strike. As we threaten to hit it, retreat back from it. It's a popular strike out there. Mr. Nick, I know you have a lot of players using Quick Strike for a lot of different things, not just selling puts in dark mode, but also looking at it for crude, looking at it for metals, and of course equities. What's on your radar, and what are people using it for in the equities land these days?
Am I finally able to talk now? Because I'm muted, I can't get a word in edgewise. I make 3 or 4 jokes.
Are you saying Tom and Sean are not letting you talk, sir? Is that what it is?
It's not dead.
They're talking
it's not
too
dead.
much?
I'm talking to myself. I'm cracking myself up over here, and I had no opportunity to.
I thought you had some
chime in.
apple butter stuck to your roof.
You did offend us all with that apple butter comment a little earlier, so you kind of hoisted yourself on your own petard there, sir. So you know,
you get
what you give.
It was honey almond butter. And
Okay.
if you don't have Justin's honey almond butter or their version of the peanut butter cups, you're missing out. Just so you know. And it's healthy.
It does sound pretty good.
It does sound good.
Yeah. So I'm a sponsor.
We should get some for dessert
now. So
after those
go.
steaks.
There's my post.
Yes.
Do I have anything else? Well, I mean, it's what are we? We're off on the week, right? From a future standpoint, and I think probably the biggest thing I could say here. What do we have? We have volatility. I'm going to go out to about the 19. Let's go. We see. So we have shift and slide. So we pretty much have we have a shift and a slide that are pretty much negating each other out. So there's not much happening here, at least on the end results or into the 4th day of the week. The activity that we've seen throughout the week, I'm sure has been. I'll take a look at that too. I mean, we've had. We've just been on a downtrend. We had a little bit of a little bit of a swing up in vol on Tuesday. We were down on Monday, up on Tuesday, down on Wednesday, and kind of flat today. And that down and up on Monday and Tuesday, more than likely, was just following the market. The vol was following the market just along the volatility curve, because when it's all said and done this week, we basically have no real movement in. The future's $8. That's pretty much nothing. And if you look at the vol curve from what it looked like last week, it's basically looks the same, with a little bit of a bid as we start to get out to the 15 delta puts, in the kind of the April contract. But after that, or the EW J9 contract, we don't see much change out here at all. So, again, this market. I mean, you would have expected a little bit different of a given the numbers that you saw today. I would have thought that we would have stayed a little bit firm, but I don't try to understand this. I just try to pay attention.
It is a challenging specter, and if you can lay off the almond butter jokes, we'll make sure to let you get a word in edgewise more often. How about that? How's that for a deal, huh? Look how magnanimous.
I will never stop liking almond butter.
Well, there we go. We'll have to agree to disagree on that one, sir. But Tom, we're touching a lot of different complexes here. Obviously, S&P takes up a lot of your day. I'd imagine you and your team over there. What's going on in S&P land? What are you hearing from the end users out there? What's attracting them in this relatively not quite low, but kind of modest volatility regime we're in right now? What's taking up your day in S&P land, Tom?
Well, in this environment, you have a lot of people trading the wings, trying to predict where the next spikes are going to be. As I mentioned, options are relatively inexpensive, and some of the block trades I mentioned have been out of the money wings on both sides, very inexpensive options. And as well as portfolio rebalancers who are looking for an automatic way to rebalance a portfolio if needed. As Nick referenced, nothing's moving around much, but there's a popular standard option put trade where you're basically selling a strangle to rebalance either on the upside or the downside for institutional portfolios if needed. And obviously, if nothing happens, they retain the premium. So those are two trades that have popped up recently. People are waiting for things to move more than 8 points, as Nick referenced.
Yeah, it hasn't been the most exciting of net movement weeks, even though there's some stuff going on intraday that has been interesting. Well, Tom, since you're in the hot seat, you're squirming over there, I'll be nice. I'll let you choose which equity product you want to focus on next. You want to hit NASDAQ, Dow, maybe some sort of combo they're in? What else is on your radar in equity land these days, sir?
Well, what I want to talk about is the recent changes in the last few months to Quick Strike. So I'm going to honor Nick's.
Is Nick paying you with almond butter on the side here? What's going on here? All this, you two colluding on the same channel here.
Tom likes hazelnut spread.
Oh.
So
Yes.
See, we had the steak buffet. They had the almond butter and hazelnut butter buffet here before.
Nutella. He's a Nutella guy. Anyway, let him talk. He's talking about us.
So a lot of our in a flat environment, investors turn to education, right? When nothing's going on, they look for the opportunity to learn more, which we're trying to focus on more at CME. And some of the tools Nick has developed to help people understand the vol curve better, how to simulate strategies better. So I was going to ask Nick if he could talk about that briefly.
Well, sure. I can talk about Quick Strike and the tools all day long. So, as Tom mentioned, there's been more of an effort to educate, and there's going to be a big effort to educate within the CME Direct platform as well, so we can start to see what tools are available for you to make your trading decisions. And as I've said every week over the however long that we've been on here, is we're constantly trying to add new things in both the free section of the site as well as in the subscription section that are going to give you access to information that's going to let you look and see what's going on with not only the indexes like we're talking about now, but with all the asset classes. And one of the things Tom mentioned volatility. One of the things that you should be aware of is that there is some nice information in the Quick Vol tool, which right now is only available in the Quick Strike Essentials version of things, but will be embedded directly inside of the CME website in the near term. And one of the hidden gems of that tool, the preview version only gives 30 days of historical volatility for both the at the money and the deltas and strike level stuff, everything that you could want, constant maturity, front month, all those kind of things. Not only does it do that, but you're able to also get ad hoc download information out of there. So if you want to go back and get 12 years of eMini at the money volatility, you can do that, and it probably costs you next to nothing to get that. So, and it's immediately available as a CSV, as HTML, and a zip file. You can chart it yourself. You can chart it internally, all those kind of things. So all the tools that have been out there, and admittedly, some of the tools are easier to use than others, and some are built for novice participants in the futures and options world, but a lot of them are built for, we like to call them the prosumers, the professional consumers. A lot of them are built where you have knowledge of what you want to look for in terms of market data, and we've tried to make that CME market data available. But as Tom mentioned, there's going to be education is going to come through the active trader community at CME Group. They use our tools to push out information every day. They're going to come through these quick hit videos that are going to be coming out fairly soon, which are going to be geared towards the tools that are out there as well as the tools within CME Direct. So a lot of different things, and I'll always plug stuff, and as I will throughout the course of this podcast and podcasts going forward.
I don't know. You and Tom put you together on the same line, and all of a sudden you guys seem like you're on the same page. I might have to get Tom in studio just to break him from Nick's dark influence there.
We're on a nut butter. We're on a nut butter high right now.
There's a reason why you're putting on dark mode now. You're getting the Dark Lord status over there. You're getting exerting influence over our other guests on the same line here.
Hey, this is totally impromptu. I haven't talked to Nick in 2 weeks.
Speaking of dark influences, I had to mention this. This one just caught my eye. I knew I like Eric Norland on the research team over there. I like Blue too, but Eric always comes up with some interesting stuff. Clearly, Eric is a huge Game of Thrones fan, because winter is definitely coming for fans of the show, and for Eric, it sounds like as well as potentially for the market. If you read his new latest analysis, which is titled appropriately enough, "Winter is Coming for Volatility." I love that. That's a great title for a research report. If you want people to read your research, hook in Game of Thrones the week that it's going to premiere again, probably a good way to go about it. You can tell he's pretty familiar with it, too. He cites the land of Westeros and the various seasons, so he's clearly deep into the weeds of all things Game of Thrones. But he's breaking down this paper, which is kind of interesting, that we're in. He says, winter is coming, and in terms of winter being a tightening cycle from the Fed, turning the yield curve flat, and it causes what he terms these market cycles. And, if you paid, Game of Thrones, winter is that big season that lasts many years, and the White Walkers come, bad things happen, all that kind of fun stuff. So he's breaking it down here, which in his Westeros style seasons of the spring being the early recovery mode. That's a high volatility period. Usually, and also easing monetary policy. So you're seeing the 2-year average of the VIX going to be north of 16 in those time frames. Then he has what he terms summer, which is the mid-expansion period. So that's going to be low vol on the average, below 16 in the VIX, and an easing monetary policy. Then you get into the fall, which is another higher volatility. So volatility kind of ebbing and flowing in these different seasons. A high volatility regime where the 2-year moving average of the VIX, again, back north, he draws that line at 16, which is kind of interesting. I'll have to ask him why he chose that level, but that's a conversation for another day. 16, so it's north of that again, and again, getting into tight monetary policy. And that's for the fall. And then winter, which is what everyone's worried. That's the recession. So the winter is the potential recession that is coming. That's accompanied by, surprise, surprise, high volatility. So a 2-year average north of 16% for the VIX and a very tight monetary policy. So interesting stuff. And you have to read the whole report. There's a lot of great graphs here, listeners, that go how many of these seasons have actually occurred from the 80s until 1997, 97 until 2008, until now. It's very long cycles. But, the takeaway from this paper, of course, is that these cycles can be very long, longer than our traditional seasons, just like they are in Game of Thrones. The seasons there are crazy weird, just like they are in the markets. And that also they're going to be accompanied by crazy regimes of volatility, high volatility, low volatility, high volatility again. This is a fun one. If you're a Game of Thrones fan, if you like to trade volatility, maybe a little bit of both, if you fall on either spectrum, I think it's a fun bit of reading here. Tom, have you had a chance to look at Eric's latest research? Are you drawn in by his multiple Game of Thrones allusions to equity volatility, sir?
I took a brief look at it, but not clearly as deeply as you have. So I should take a pass at any comments about it.
We'll definitely have to get Mr. Norland on to talk about. I just thought it was a great way to mention Game of Thrones here on the show, which is always a fun one. Nick, are you a Game of Thrones fan, and are you buying what Eric is laying down here in terms of the broad seasons of equity volatility?
Well, when Eric's on, I always sit there with my chin in my hand with my elbow on my desk because I just love what he has to say. So I tend to be in general agreement with what he has to say. But if you had to guess, what would you think about me and Game of Thrones? Let's just get to the point.
Probably a little too graphic and crazy for you, I'm guessing.
I think I watched episode 1.5, and it was a little bit too much from a little graphic violence.
If you were out after 1.5, and you missed a lot more crazy stuff to come in the subsequent seasons, probably a good move there, sir. I
probably couldn't have been around then because there was a little bit too much.
Nick, this is Sean. What do you watch?
What do I watch?
He watches the almond butter cooking show. That's what he watches.
You know what? if we're going to spend 30 seconds on this, my kids and we'll watch the British Baking Championship. Yeah, that's some good stuff. I will watch all the singing competitions because deep down I wish I was an entertainer. Let's see.
Because you have that entertaining personality about you.
I do.
You weren't here, Sean, a couple weeks ago. I labeled Nick the beloved curmudgeon of the futures options space. I think that was an appropriate title for him.
The quick curmudgeon. That's what I am.
Quick curmudgeon, yes. There you go.
And what do I like? Mrs. Maisel, The Marvelous Mrs. Maisel. That's a fantastic show on Amazon Prime. So yeah, I like things that are uplifting and jovial. I don't like depressing, sad things.
Two adjectives no one has ever applied to Game of Thrones: uplifting and jovial.
Nor to me.
Yeah, that's true. So I guess that's appropriate. You wouldn't watch it because it might drag you deeper into the curmudgeonness. By the way, if you're curious, when have some of these winters happened in the past? He breaks down a couple here. 1990 to 92 was a previous winter. We saw issues. That's a post-Drexel, Lambert, Persian Gulf War, etc. Obviously, 2008 is probably going to factor in there. I haven't scrolled all the way. Not all sorts of seasons going on in here. Winter again from 97 to 2002, so a 5-year winter there. So he cites a lot of great details. Again, that's all in the report. Check it out. Winter is coming for volatility. Let's see here. I know, Sean, you have a bit of a hard out in a few minutes, so we have to do a little bit shorter one really quickly. Then before we get back on to equities, let's hit a couple of maybe me and Nick will run really quick. Mr. Nick, I'll let you choose since you're the beloved curmudgeon. What other product you want to hit really quickly before we wrap up here and get some questions maybe?
Well, let's talk about two of my favorite things. Black gold and gold. So whichever one you want to do first, or can only pick one.
We can do two. We can do two. I already pulled up gold because I knew you were going there. So let's start there. Let's go in the shiniest of the gold, as opposed to the black gold. And I'm doing my old select all again, which is driving. Here we go. Now I tend to choke quick strike with my demand for strikes, sir. So many. All right, here we go.
Don't like to select all. There's a lot of noise in that.
There is a lot of. See, I like the noise though. I like to sort through the noise to find my own signal. I'm crazy that way. Let me ask you,
are you in dark mode or light mode?
I'm still in light mode because I haven't had a chance to flip the switch. But I want to see more than just the puts. So I'm joking, listeners. You can see more than puts. It's just fun to say before Nick gets mad at me. All right, let's go here into all things gold again, below the magical, mythical 1300 level, but not a ton, off about a handle or so over the course of the week. So right around 1294. Not a huge big move going on this week out here in the metals. Vol, kind of the same thing, a bit of a mixed bag. Not a lot going on with the Vol either. Let's see really quickly what's lighting it up. And it's lighting it up, looks like actually fairly far out there. We got, what is that, Feb 2020. It's so far down on my strike screen, it's hard to see. There it is. Yeah, Feb 2020. 1875 calls, Mr. Nick, lighting it up. Where's our guy who writes us in about the gold whale? I think he'd be writing in right now. Oh, look at this. We got a funky three-way again, Mr. Nick. We got the 17.5, 5,000 of those going up today, 17.5 calls, followed by 10,000 of the 1875s and 10,000 of the 20s. That's an interesting ratio. Usually maybe you do 1 by 2 by 1, not 1 by 2 by 2. But interesting nonetheless. So 17.5, Mr. Nick, and then 1875, and then 2000. So $1.25 wide on that one. Again, maybe our friend 17.5 by Feb of 2020. What do you think of that one, Mr. Nick?
Yeah, I just don't. That trade, if I'm going to trade something, I want to trade something where I got an opportunity to make some money on it. But I'd have to look at the premiums on that to see what they're doing. I mean, that's out there, Feb 2020. So that's that's a full year, but those strikes are so out there. I'm not even sure what deltas those would be. That has to be some sort of risk adjustment thing potentially, but think. I don't see it. Everybody I'm talking to thinks that gold's got, another 25, actually another $45 in it before it's finished seeing this downside. So I'm not exactly sure. I'm not exactly sure what that's all about, but I mean,
I like that trade less than your almond butter.
What, say what?
I like that trade even less than your almond butter, sir, which is saying a lot.
Almond butter trades, man. I don't know what grocery stores you're frequenting, but I'm telling you, there's almond butter lines at the grocery store.
Oh yeah, it's out there. I know. I'm not huge on it, but I've digressed you, sir. By all means, continue.
No, look. I said I'll talk nut butters and healthy choices any chance that you want. Anyway. Yeah, I mean, the thing in gold, like we've been talking about all the time, this market has been, we talk about paying the rent. This market is paying the rent with these moves, and we're down a little bit on the week, but we're down quite a bit today, right? I mean, our move today is almost what do we look? We're almost $20. And we probably have hit the $20 mark. So when you look at that from the way that we typically talk about how to trade this, where we look at these out of the money calls and hedge them, or these out of the money puts and hedge them, this market fits that perfectly. And again, we just call it a mini straddle, and those in this kind of, and we still call this sideways, right? We're kind of right in the middle of the range of where we are, and the reality is that the vol is flat to down. It's flat to down a little bit this week, or we'll call it flat because there's some red and there's some green, but there's not much really going on there. This market is ripe for those kind of trades, and the mini straddles are nice because they take the belly of a straddle graph and move it closer to the x-axis, and you could go build a trade over on the strategy analyzer on the cmegroup.com. That's available for free, or the spread builder inside Quick Strike Essentials, and see what I'm talking about there. But this market is tradable. It's scalpable from a gamma standpoint because you can put on things that don't cost you. You could put on spreads, cost you $500-600, and a contract, and hedge it and make some money on this as the market moves back and forth. This, from my typical way of talking about it, was in a good spot from the upside standpoint before today. I think, me personally, I like again, not knowing anything other than my observations, I like the 1270-75 strike range right here, hedge from a put standpoint, but I like to see a little bit more downside maybe, or let the vol come in over the course of the next few days before you start looking at it again. Yeah, this is going to be interesting. I'm really, I don't know. Does anybody have any insight as to why this got tanked a little bit, or I'm not sure.
Yeah, I think it's another one of those middling weeks. Not a lot of stories for gold to move, I think, sides in either direction, right? So it's kind of when that happens, I think a little bit of drifting to the south is not exactly, particularly what you said earlier. People still have near-term bearish sentiment on gold, so a little bit of a drift to the south, I don't think is too head-scratching right now. If it was a big pop, it might be something different. Speaking of moves, let's see really quickly. Not a huge move either in your other gold, a.k.a. the Texas T, Mr. Nick, a.k.a. WTI. Coming into showtime, we're at about 63, right around 63.5, up about half a handle net on the week, not even 1%. So we're maintaining north of that 60 handle, which everyone was kind of watching, but not quite breaking through that 65 level to the upside, which I guess we coming into summer driving season, maybe you're okay with that. You don't want to see your crude getting up there any higher out there. Right now, though, the big trade of the week, Mr. Nick, by the way, vol, pretty much as you would expect for this kind of week. A bit of a mixed bag, actually up a little bit in the nearer term portions and off a little bit longer term. So a bit of a mixed bag out there and on this slight upside week here in crude. But Mr. Nick, the action was all pretty much in May. It was about a third of the paper up there, and it was all May 65. So near-term upside calls leading the dance, 6,000 on Monday, 4,600 on Tuesday, about 3,000 on Wednesday, another 4,000 today. So back and forth on that 65 strike they go. Net kind of closing on the week, but looks like just a frenzy of activity, nearly 18,000 total on the week going up back and forth. So near-term upside is where the action was this week. Even if there wasn't a ton of action overall in crude, 65 calls lighting up. Bit of a frenzy on the 65s, Mr. Nick. I know you have a lot of crude traders on your platform, but they've been slinging a lot of hot and heavy. And these are contracts that are going out in 5 days, not even. So these are effectively weeklies here, which is interesting. We talked about that before. People won't trade them in the weeklies, but they'll trade them in the serials when it comes down to short-term expirations. A weird function. But what's lighting up? We've talked about that before. We won't beat that again today. But what's lighting up your tape this week? And what are your users up to in crude land these days on Quick Strike, sir?
Well, I think as the week started, if you go and if you're looking at where vol is now versus where it was in settle, we're up a little bit on the week, and it's basically a shift of the vol curve. So there is definitely a bid to the market here. In June in particular, up 1 1/4, a little bit more than that. So I think that what I've been hearing and the people I've been talking to is, sort of not expecting too much of an upside, but starting to try to look at some of the belly of the vol curve and see some cheapness in those strikes up above the 65, so 66 through the 68 or 69. Those were those levels from a delta standpoint, as well as from a delta standpoint more is where you look at to normalize it across time. Those were pretty cheap. And those were very tradable. Now they're probably still cheap, although we do have a little bit of a bid. So anybody who participated in that earlier, I think Macro Hedge put out a trade that was a mini straddle that was hedged earlier in the week. There's money there, or a break even after 5 days. So it's in a good spot. And when you see the market off, we're only up 55 cents on the week for the June contract, but we're off almost $1 on the day. So you start to see if you can cover your decay for that week just with a little bit of a bid to move down. Again, it depends on the shape of the vol curve, but that's the kind of stuff I tend to look for is sort of the bellies of the vol curves and then the skews getting out of whack. I mean, that's really where I believe people should pay attention. And that's kind of how we build Quick Strike, is to pay attention to, as Tom mentioned earlier about looking at volatility, is to pay attention to where volatility is, because you don't have to be a volatility trader to trade vol. You can be a retail trader and trade volatility. You can be smart about picking what strikes you're going to trade or when you think you're going to get into a position by looking at the volatility. So if you're retail or professionals, if they're listening to this, they're trading vol because they're looking for extremes or for opportunities in the current single expiration, the curve, the slope of the vol curve. They're looking for opportunities to trade and get some return on a move down or move up, or just in a panic. Any strike that's a low vol, if things move, those are going to be worth more money, even if you move away from those strikes. So that's what's really catching my eye. We had a shift. What do we have? We're getting shifts up and slides down, right? But the net effect is increase. The shift is overpowering the slide. So right now the vol, the way that there's a pretty even smile in the crude, but it's at the money is sort of trading more up in more of a put slopish side. So if you go out there and take a look at those vol curves, you're going to see what I'm talking about. But that's what's catching my eye. I don't. Again, knowing nothing, I think we have more just kind of rangy trading in this, and an expectation from my standpoint anyway. I would play the move down more than anything else.
All right, thank you for that, Mr. Nick. Unfortunately, our buddy Sean here has got to head out, got to do more traveling back hither and yon. So Sean, make sure before you head out, take that T-bone bag with you for the doggy bag there. I hate to have it go to waste. But Mr. Sean, unfortunately, music means we got to cut it a little bit short because you got to run out here today. But before we go, Mr. Sean, listeners want to learn more about what you guys have going on at FTSE. Maybe you got some interesting research coming out, maybe on the buy rides. Maybe I know you're at the Volatility event recently, maybe some interesting volatility research. But they just want to reach out and see what's going on over there. Where should they go? What should they do, Mr. Sean?
Well, there's a couple of places to go for good information, and that would be cmegroup.com. And I'll let Tom take you through CME's website and Quick Strike and where to find relevant information, along with that countdown clock for the Russell Micros coming out on May 6th.
May 6th, there you go.
And in terms of white papers and analysis on volatility, our partner exchange, CBOE, also has those buy right products, those indexes that are being calculated. You could actually go to Rick Rosenthal at CBOE for those as well, and as he was here last week or the week before.
I saw looking at some of the papers coming out of RMC this year. It still was a lot of the old, shall we say, harvesting of the risk premium was the theme again this year. So I guess we're back in that mode again. It's safe to sell puts, it sounds like, at least according to all the data coming out of RMC. So I'm sure you guys probably have some of that as well. Check it out over there at FTSERussell.com. Give them a follow on Twitter while you're at it, at FTSERussell.com. By the way, don't take all those leftover steaks, Sean. I want one of those as well. Those were pretty good.
I left a nice doggy bag for you. So.
Perfect. I appreciate it. I expect nothing less.
And thanks for having me, Mark.
Thank you for coming in for the delicious
Tom, Nick, great to talk again.
And he just wants to talk about almond butter, so we'll leave him out. But you mentioned Tom. Tom, obviously, you guys have some interesting things going on in the world of equity options over there at CME. If people want to go learn more, maybe get some data, get some white papers, or maybe reach out to your team with some questions, where should they go? What should they do, sir?
Basically, you can go to cme.com website and type in my name, You'll get my email. You can send any questions to me. Make sure we get quick responses to them. And Sean mentioned again the Russell. So I want to have everybody take a deep look at the micros that are coming out. Nick referenced trades that you can enact to sort of pay the rent. And for active individual traders, the micro products does just that, as a reduced multiplier, therefore reduced overall risk of a trade. If we think we have a lot of interest in the micros, we're going to have liquidity providers providing the tight markets that you're used to at CME. And, everybody should reach out to their brokerage firms to see how these are going to be handled on their side to make sure they're ready for May 6th.
Yeah, should be interesting stuff. Speaking of interesting stuff, Nick, I was joking before when I said you can only sell puts in the dark mode. I know you can do a lot more, so walk us through it, sir. What can I do when I turn my screen dark?
Well, you can buy puts like we know Sean likes to do.
Sean likes to buy some puts. You are correct.
When you can. Buy puts when you can. Not when you have to. Sean Smith, steak eater. What else is going on? Well, we got the big dark mode releases coming this weekend, so there's going to be some new features out there for the professional users outside of the dark mode, so stay tuned for that. Again, I mentioned we have our little quick apps that we put out there where you can buy the spread builder and the TWIFO fully clickable historical data and all for the weekend for the remainder of the time for the tabs that are up there. That's out there and available. So get out there and take a look at them, the tools. We're trying to make the tools more accessible to the retail people as well, just because we don't want it to be too overwhelming. So we're going to be knocking down some screens to make them be a little bit easier to digest. And if you're looking for trade ideas, like I've always said, got to give Macro Hedged a look over on Twitter. They're having some great success, gold being one of them this week, and crude as well. So have a look and let me know if you have any questions. I'm glad to help.
All right, check it out. Quick Strike, QUIK STRIKE1 on the Twitter, or quickstrike.net on the web to learn more. And on behalf of Sean, the bringer of delicious steaks, and Tom, who I'm sure would do the same if he was in the studio, hint, hint, and Nick, and who's probably just going to bring us almond butter, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in. I apologize we didn't get to questions. Had to do a little bit of a shorter show today, obviously. We'll get to more. We got a bunch of good ones out there, so we'll get to you, I promise. And we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.